Dow has reached record high. This is the moment that I've been waiting for because it's time to unload everything. Now, the thing is this, I'm very, very sure that we will see a technical recession by December 2025 or latest by the first quarter of 2026. Now, I'll tell you more coming up. Our main thing is everybody, please be careful because I really think that the selling is going to hit us very, very soon. So do your risk management. Now, one thing is that right now the US Treasuries has the worst bear market ever. All right, since 2020, all right, we can see that we have a big sell-off in the Treasuries, and this is, you can see that most of the time Treasuries usually all goes up, but the last 5 years, you can see that it's now in the negative territory, the worst since 1930. So the thing is, right now, inflation is going to shoot up. This will become a definite public debt crisis, and things will get very dicey for US if they don't find a solution in the near term. As a matter of fact, right now, right, the thing is this, everybody is basically joying with joy because the Dow Jones went up by 800 points. Everybody was happy. Jerome Powell seemingly caved in and said that a mere warrant to have interest rate cuts, okay? But thing is this going to be the time to buy? I beg to differ. In fact itself, I think that this is going to sell instead. This is the historical high that we're waiting for because every time before market comes down by 5% or more, they must hit the historical high. So I believe that the Dow will drop by 5%. Now, last night, we already saw the Dow dropping by 0.77%. I think there will be more room to go. So traders, watch out for this. This may actually be a bad week for next 2 weeks itself. Now, what's the reason? Because the US debt margin, now the margin debt has really went up to $1.02 trillion. That is the largest increase in history by $87 billion in June alone. That means that everybody is going into buying stocks, buying things on margin. And when this happens itself, it will crash. We saw it before back in here, this period of time in 2021, and the market came down very badly. And of course, if you remember, now you can see that Bitcoin is coming down. Bitcoin, Ethereum, all coming down because there seem to be some ongoing rumors that it's overdone, and this BlackRock is selling some of their holdings right now. So to me itself, this is not a good sign because when people are buying shares on margin and it's so high, definitely the boys will come in to go for the kill. And right now, even the mutual funds cash balance has declined since April. As a matter of fact, right now it's at the lowest level. And that means that everybody is almost all into the market. So it's that if everybody's in the market and the market is at a high, I understand. But the question is who's selling? So if the market is actually at an all-time high right now, but yet the margin, I mean, the people over leverage and also plus all the cash is being utilized. The question I want to say is this: for every transaction, there's always a buyer and a seller. Then who is the one selling? So this is something that you must reconsider and think about it right now. So the thing is this: if Jerome Powell really start to cut interest rate very aggressively, let's go back into time. In 2001, we saw this happen, and of course, we saw the stock market basically coming down, and we entered a recession. Okay, so the thing is this: it happened again in 2008 when Lehman crisis happened. Fed cut rates, right? But the thing is this: we have a recession, so it has to come together. Fed will not cut rate really without thinking through. They must have a reason for that. If the Fed is going to cut rate, that means that something very wrong, and that will send a wrong signal to the market, and the market will start to sell. And I think this is what we're waiting for. The market should be selling at least by 5% over the next 2 to 3 weeks' time. So the thing is this: if the government is telling people that everything is good, no problem, typical Donald Trump thingy is all right. The question is, if that's the case, then why is the government spending? The government is spending a lot of money, really a lot of money, adding more into the debt. So if the government is doing well, the US is doing well, why is this an increment of this spending in a strong economy? And we can see in the past, when this happened, the market will sell off very soon. So that is another reason why I feel that this one must look, because now there's something very important. The 30-year JGB has hit a new record high level. Now, when JGB yield hit the high level, that means that the stock market will break. Yes, indeed, a higher JGB yield usually will break the stock market in US. So what we are seeing right now is actually happening. So traders, be careful. All these are signs and patterns that keep on repeating. Now, one thing to note, the heavy truck index, this is something very interesting. Since 1972, whenever this index had to pull down after it hit a high level, you can see the stock market follow through. It happened again back in 2000, and we can see the stock market coming down. It happened again during Lehman Brothers time. It happened again in this 1819 period. So the thing is this, we can see clearly now that this heavy truck index is coming down, and that means that the stock market to down by at least 5% is going to be very, very possible. Yeah, 5% is not a lot. In fact, it is a very small correction. That's why Morgan Stanley says that the market and the economy are telling diverging stories. It's from Morgan Stanley. So again, all these tell you that, guys, something is very wrong in the market. And right now, the US citizens are not able to really buy home. Right? Think about this right now. The amount they make versus the median household income itself, right? You can see the needed for income versus what they make is a huge gap itself. That's 57%. So think about this. Over the years, even during a tough time, we're still okay. But right now, you can see the income is really getting a big gap here. So guys, this is not a good sign. So that's the reason why everybody is buying stocks, because they take the margin, they take borrowed money, and they buy stocks to cover this gap. But the thing is this, if the stock markets have to come down by 10 to 15%, example, these people will lose everything. And when you lose everything as well, you can see that mortgages coming in, foreclosure coming in. This is going to be very, very scary. And I think that this is a very wrong thing to do right now. If they cut interest rate, it may help certain way, but that will send a wrong signal. Because now we never seen a larger drop like this. The Conference Board leading economic index and the coincidental economic index has fell to the lowest level since financial crisis. Okay, so you can see right now when this happened, you have a recession. You can see it happen again. We have a recession. See the red shaded area. So where are we now? We are almost there, guys. We are almost there. And is there going to be a recession? Of course, it will happen. So this is why I say that there is a very high chance to see a 5% drop in the stock market in the near term, because this is going to be very scary. So last night, we already had to short the market. We already told our students to short the market, and it came down. Now there's a trend up here as well on a conventional chart. We have a so-called quadruple top here, and now a new all-time high. This is beautiful. So I suspect that the market will have to break 45,000 to basically break the psychology of the traders. And if it goes down, the next movement here can be as low as to 42,800. All right, that means we're talking about another 2,000 points from where we are. And maybe the moving average will say some support, because we've seen this happen before. We may see it happen again. But guys, be careful, because I think that the fat lady have sang. And you'll be very careful, because now we can see from my own indicator, the boys are still trying to buy, but the market is coming down at the moment. So once the market failed to stay on tune, very high chance we'll see this market come down to 44,000. And if it goes down further, that's where I said earlier, we may see 44,000 here itself. And then the next number will be going on to 43,000. So guys, all these numbers, please take note: 44,700 series, 44,000 and 43,000 series. This is going to be the likelihood the market may perform as long as no new news coming in. I think that the US stock market will drop by 5% for the next few weeks. All right, guys, so stand by for this. Be careful, and I hope you do your best in your trading. This is Kel signing off. Enjoy yourself. Bye-bye.